is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 14th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows, that we should each be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, any ping will do. So let's go ahead and get this show started on magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 82 points, trading at 23,916. S&P's down 12. NASDAQ 100 down 0.75%. That's off 48 points. Russell off 7. So it's mean and red across the board. Spot volatility index is up $1.08, trading out at 1927. That's about 6% to the upside. Gold's up 250. Silver 2 pennies. Light sweet crude back 41 cents. Lead the charge dollar-wise. The upside booking holdings. It's $30 and change. Lululemon is up $7 or nearly 6%. Lending Tree is up $6, about 2.5%. To the downside, Auto Home. ATHM is off $10 or 13%. Google's down 10. That's less than 1%. Amazon is off 0.5%, off $8. So plenty to look at. But let's first go to Rick in Dallas. Rick, thanks for calling. Thanks for holding. How are you this morning or this afternoon?
I lost you. Are you there?
I'm here. I'm here.
Okay.
Earth to Rick. Looks like we lost Rick, but I know what Rick is calling about, which is natural gas. I don't know specifically what aspect of it, but let's take a look at natural gas for Rick. Hopefully he's able to follow us and listen to us on his cell phone or radio, however it is that he might be doing. So if we're taking a look at natural gas, right now trading out at $3.50 and had a big gap to the upside. Big gap to the upside last night as things opened. And so I suppose the question is, where is there resistance? So you've got this really quite an interesting pattern here. Because if you look at the daily and the weekly time frame chart, first let's look at the weekly. Unfortunately, this is going to be the this is the February contract that we're looking, but I'd be curious if I put up a continuous contract if I could see the same. Now, the same I'm referring to is a island bottom out here. And we can see that also on the daily time frame chart. So island bottom patterns and island top patterns are either the most bullish or more bearish that are out there. So you can see that we had price gap down back on December 31st, and then you had the gap up last night, and that created this little island. That means all these folks that were stranded, now this could be a good stranded, from December 31st through Friday, if they were buyers out there, assuming they weren't shorting natural gas, if they were buyers out there, then what occurred as a natural gas contract opened last night from a candlestick standpoint is a real positive. What I can also share, Rick, is in taking a look at this chart, opened up above the top of its daily box, that would have been resistance. The top of its weekly box is where it's trading right now. That's at 345. As long as price stays above that, then it's above resistance. Says it has higher to go. You might ask the question, higher to where? That would be a great question. All that I can do at this stage here is take a look at retracements, meaning I would go all the way to the high out here from the trading week of November the 12th down to the trading week. See if it'll get down there. Of December 31st, the 0.382 retracement is the first level that it wants to try to attain. That's at 363. You're not like a mile away from that. But more likely than not, with that island bottom pattern, I'd say $4 is where it's headed, $4.09. So, Rick, thanks for trying to call. That's Stevie's take at natural gas. I hope that's what hope that's the information that you were looking for. But if not, call back and happy to chat with you as well. As long as we just took that call, and we'll go take a look at the market as well. Let me get to a few of the questions that came in Friday. Now, Friday, I was pre-recording the show at 8 o'clock in the morning. I will be doing the same thing tomorrow. I'll be doing that same thing on Wednesday, and I'll be doing the same thing on Friday. So you're welcome to send me the emails ahead of time, and I'll cover those during the morning show, which gets replayed from 1 to 2. But I will be doing the show live from 8 to 9. So we'll most certainly be looking at the equity futures contracts, see what they are communicating to us out there, and anything else. But Greg had called, or had written in, about ticker symbol APPN on Friday. APPN is a Payan Corp, and Greg is in this at about 25 bucks and change out there. So right now it's trading lower, 29.92, and I think the question was just to kind of give my analysis of what's going on here. So as we take a look at this equity, and had we looked at it on Friday, here's what we would have noticed. We would have noticed that price was trading into its swing point, its most recent swing point. That swing point takes us back, Greg, to the trading day of December 3rd. Now, out there was 426,000 shares. The bottom of that swing point is 29.58. The top is at 31.36. 426,000 shares, and that was tested on Friday, the 31.36, and it was rejected, but it was with volume, 659. That said that high, 31.36, is likely to get tested again. As long as price stays within that candle session, it's a daily session out there, which is between 29.58 and 31.36, it's at least going to get tested. Will it take it out? That I don't know. Why didn't it take it out with volume when it was trading on Friday? And then, therefore, give you a larger, so to speak, A to B equals CD pattern here. The answer, my friend, is in the mere fact that this is really trading. Let me do this here. It's really trading within a consolidation. So if I look at the daily time frame chart, we now have a high that was tested. That was Friday, and that was the December 3rd swing point. We also have a low that was, in essence, tested, and that's the low out here from November the 20th. So the consolidation, thought I grabbed the consolidation tool, but no, Stevie didn't. He's going to grab it now. So this is really trading in a consolidation out here, Greg, and could bust it up. I would say be careful on this equity if it closes below 29.58, because if it does, it could easily run all the way back down to the bottom of the consolidation in the $24 range, below your cost on the way in. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's go take a look at the markets, and we'll go to some questions that have come in. Of course, one of these questions should be resolved here. Not resolved, but answered as we go take a look at what's going on inside the markets. We start off looking at the daily equity futures contracts, daily time frame, but on the charts are both the daily and the weekly TAS market profile. So the green horizontal lines are the weeklies. You'll see them in the bottom of my data box. It says top W, control W, bottom W, standing for weekly. The other blue ones say just simply top, center, and bottom. Those are the daily time frame profiles. If we take a look at the ES Mini, we start there. The pullback that began overnight came back and tested the top of the weekly profile. We did see a close above the top of the weekly profile and daily profile on Friday of last week. So that was bullish. And the retracement that we've seen thus far is nothing more than a test of support. Now, the bullishness just simply means that the pattern that is in play still is the A to B equals CD pattern inside of the ES Mini. And the 1-to-1 takes us up to a price level of about 26.44 out there. So until we see support broken, that is really the play that is out there. We don't have the same pattern in the NQ. The NQ rejected the weekly profile, closed just slightly under it. So it doesn't have the same strength as we have seen inside of the ES Mini. The ES Mini, the Dow, which is YM, that is in panel number 3, and Russell 2000 each closed over their daily and weekly profiles out there. Inside the case of the Dow, it has been nothing more than a test of the top of the weekly and the top of the daily profile thus far. Now, where price closes at the end of the day could change this, but as of 1:20 in the afternoon, these charts are still bullish. And again, what I mean by that is they want to go ahead and complete their patterns. In the case of the Dow Equity Futures contract, that says that what it wants to do is trade up to about the 24,528 level, quite a bit further to the north than where we are trading right now. But that's the pattern that is in play. Inside the Russell 2000, to me, the A to B equals CD pattern isn't a real clean one, so to speak. But if you were to tie my hands behind my back, well, then I couldn't draw it in, could I? But if you just kind of metaphorically tied my hands behind my back, and asked me to draw it in. Well, it's already above the 1-to-1. It's on its way to the 1-to-1.272 at about 1464, or maybe even 1502. So these are your daily and weekly profiles. These also are the A to B equals CD patterns that are out there. And if we take a look at the ES Mini, we just start here, you'll see prices way above Stevie's red line. Should there be a pullback? If there were to be a pullback, then 25.17 becomes a level of support. Now, Friday was a little doji candle. We can see that. Right now, we are unchanged from the open of last night to where, I mean, we're exactly unchanged to where price is trading right now. This still has the Gartley sell pattern up at the 26.44 level. Today, if things were to close right now, right around here, this would be day 7, and that Tommy DeMarca set up a power of 9 count, and that would say to you and I tomorrow, Tuesday, Wednesday, or Thursday would likely be, if this is the pattern that's going to identify a top out here, then it would be one of those days, tomorrow, Wednesday, or Thursday out there. So that's the pattern that is in play when I take a look at the ES Mini. With regard to the other Stevie red line areas out here, if you take a look at the NQ again, everything well above those levels, Jay, 63.92 inside of the NQ out there. It also is going to, it looks like, is going to be in day number 7 of that power of 9 count out here. Here's the Dow. We talked about its A to B equals CD, the red line down at 23,288. Again, that is support until that's broken. That remains support on any kind of a pullback, but you can see these could be sizable pullbacks. In the case of the Russell 2000, you're looking at 1379. It's trading at 1444 right now, so a pretty decent size pullback in the Russell should one unfold. But looks to me more likely we don't see that top in each of these equity futures contracts really set itself until either tomorrow, Wednesday, or Thursday. I think I've said that now 3 times. So 3 times, you're out of here. And I promise I won't say that any longer. So, Jay, I hope that helps you out with regard to Stevie's red line, as well as the TAS market profiles. Bob Y wrote in on Friday, and Bob wanted to take a look at Kronos. CRON is the ticker symbol. Kronos and Roku. I don't recall what for. Or if it was mentioned, just simply I wanted to make sure I got the symbols and who actually wrote in about it. I guess it would have been helpful. But I'm going to give you my analysis either way. It doesn't really matter whether you're long, short. Look at, if we take a look at Kronos, here's what we know from a daily time frame. In the daily time frame, this had wide price spread, accelerated volume back on December 7th. We can see that gap to the upside. Fill in the gap, and you'll see the wide price spread. The volume there was pretty nice as well. That volume on that trading session came in at 55 million shares. Now, that 55 million shares was really going up against 129 million shares on September 19th. On Friday, that high, which was 1395, was tested with 10 million shares. Tested and rejected. Unlike, oops, I didn't mean to do that here, but unlike the ticker symbol, was it APPN, which was testing a prior swing point with volume, this one is not. And today you've got another test, and that test, we're at 6 million shares so far. Sounds like it might do volume similar to Friday's session out there, and that's not going to be enough volume to get anywhere near the 55 million level. So price is up at resistance. We know that. It has not yet broken through support. So, Bob, support here would be the bottom of its the top of its daily profile, 1341. You're 1351. Those 10 pennies mean a bunch, because if you see price close under 1341, I would anticipate a move to 1232 or 1177. Could go lower than that, but those would be the first 2 places that I would be watching. Ticker symbol there, CRON. Not enough to bust it to the upside. We take a look at what's going on a daily basis. You also want to look at Roku out here. ROKU is the ticker symbol. And if you type in RUY, what will happen is nothing, because there is not such a symbol. But in the case of Roku, if we put that in here, well, then we have information. What's that information tell us? Right now, this is trading within a range of 36.88 and 44.48. Now, this did have a nice sign of strength here, and that was on January 7th. So that was a nice sign of strength coming off of the bottom. Looks like price is trying to pull back to test that sign of strength. That either be at the 36.88 level. You'd like to see that test come in with less than 42 million shares, or price could be coming all the way to test that January 4th high, 34.11 out there. Is there anything else that you and I can look at or figure out with Roku? I'm just going to type this in on my other screen, see what pops up. And the answer is not a darn thing that's going to help us, so we're not going to spend any time there. So this is what I see when I take a look at Roku. Looks like it's going to pull back to that sign of strength level. And I'd say that 36.88 would be the first place to take a look at that. So, Bob, hopefully that answers your question for both Kronos and Roku out there. Inside the Tiger's Den, Tarpon 2 wanted to take a look at KEY. That's the ticker symbol. So when we get back from this break, why don't you guys look at it during the break? Tell me what your call would be. Tell me what your call would be to Tarpon 2. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So did you come back with taking a look at KeyCorp out there? Let me know what we should suggest to Tarpon 2. Here's what we know. When I take a look at the daily time frame chart, we can see that this thing was had really broken out back here. Wide price spread, accelerated volume, really began on November the 7th, and the low of that session was 1416. Now, when I say accelerated volume, the day before it did 69 million shares. That day it did 128 million shares. You can see a wide-ranging bar, one of the widest ranging bars to the upside inside of Key Corp. So we know where it broke out from. And price had pulled back and tested this level on Christmas Eve with 39 million shares. Christmas Eve was a partial day. 40 million times 2, 80 million. 80 million doesn't get us to 128. We just have to use our imagination here. But what we do know is that 1416 held as support out there. Oh, I take it back. I'm looking at a weekly time frame chart. A weekly time frame chart out here. So that was the week that began. Yeah, that makes sense, on Monday, December the 24th. So we were missing, forget about a few hours, we were missing a day and a few hours out there. But nonetheless, price pulled back to where this thing had broken out on a weekly time frame. Now, if we take a look at the daily chart out here, if we're just looking at this chart and we don't have our power of 9 out here, we wouldn't really know how to interpret this, but here's how we can interpret this. We'll just pull over the chart that does have the Tom DeMark set up 9 count, where you typically, when you get to that 8th, 9th, or 10th day out here, I don't mark it as number 10, I just restart at number 1 out here, so where you typically see one of 3 things. One of those 3 things can be the hiccup. And this is what this had, was the hiccup, because you did make that high on day number 8. That's why the markets could make their high tomorrow, day number 8. And day number 9 just was a sideways move, as was 10, as was 11, as was 12. And today, you're back off to the races. So it looks to me, Tarpon, that where Key Corp is headed to is that Tommy DeMark set up trend line that's at about the 1845-ish level out there. So you like today's action because it just simply continued moving higher, just simply says there's lots of momentum inside of ticker symbol KEY. I hope that helps you out. Let me take a quick peek, see if there are some questions out here. I do see some that have come in. One comes in from David R. David said, "Hey, Steve, love your input on the market. Would you comment on PCG, possible bankruptcy in the future? Apparently lots of sellers, but buyers too. Why buy this stock in owning a stock in bankruptcy? What can be profitable?" You're asking great questions. Nothing that I can really add input to. I mean, they seem to be pretty much dead set on the PCG on declaring bankruptcy. I don't know if it's Chapter 13, if it's Chapter 11 out there. If it's Chapter 13, they're just going to be in a reorganization. I've got to believe, with them being California's power company, that it's going to be a reorganization. But it could be a Chapter 7 where they just simply wipe out everything. Possibility. So let's just say, because of all those unknowns there, why should we even spend any time trying to figure it out? Why would you go ahead and invest in it? Just doesn't make any sense to me out here. So I appreciate you writing in. It's just I don't have any good, valuable input for you on this one, other than to say I think there's better and easier places for you to go ahead and make some money. So thanks for your kind comments and writing in, and we'll just simply move on to the next one, which is coming from Robert H. And Robert says, could you please show the TAS profiles for FCX? We can. That's Freeport McMoran. And this goes on to say, in your opinion on going long. Thanks much, Bob in Colorado. So if we were going to take a look at Freeport McMoran, Bob in Colorado, we need to do a couple of things. One, obviously take a look at the chart and get a feel for what it's doing. The second thing that we have to do is we have to go see what's going on with the Aussie dollar, because there is a direct correlation between these two. So when you're trading Freeport McMoran, you're really a currency trader. How do we know that? Well, actually, we haven't pulled this up for a while, so maybe this will prove that I'm wrong. But let me see if I can actually find that chart. It shouldn't be too hard, because I'm pretty sure I put under FCX Australian dollar. And so that should pop up on my screen here real quickly. How about like this quick? So the top line, these are closing prices, Bob, that you and I are looking at. The top of the panel is the Australian dollar, and the bottom of the panel is Freeport-McMoRan. And so, yeah, you can see the correlation. It's a directional correlation out here. Not necessarily pip for tick, so to speak, or tit for tat, but you really have to. Now, what we can say about the Australian dollars, it's been moving higher, bottomed on January 2nd. The real bottom that took place on Freeport-McMoRan seems to have been, was December 24th out there is when it bottomed, kind of much like the markets out here. So let's just simply go back, but take a look at Freeport-McMoRan itself. But you do want to, you know, I don't know what your time frame holding is, but make sure you get a grip on what the Australian dollar is doing as you trade this. Here's what we know about Freeport-McMoRan and taking a look at the weekly time frame out here, and that is that price on last week had gotten up to a high of 1174, and the top of that weekly box is 1175. So here's your range right now. Let's say that you're in this from a long. Well, you're asking about going long, and so we would say, no, we're not going to suggest that you go long at $11.60, knowing that $11.75 is resistance. I'd rather you not pay $11.60. I'd rather you pay $11.80 or $11.85 or $11.90 or something like that, where price is taking out a level of resistance. So that's what I see when I look at the weekly time frame. We don't see that same level of resistance as we look, excuse me, as at the daily chart out here. Let me punch FCX on my other chart system, see what comes up out here. It does show a nice little bottom pattern. And that's where price was moving lower, doing less relative energy. Back on December 26th, that was really your buy signal, your buy date, because you had that nice three-river morning star, a nice bull sash candle, a nice key reversal candle. You have a Rhodes momentum indicator bottom. Price had closed over Stevie's red line. You had everything. Today looks like it's going to be day number 7 of that time to mark setup 9 count. The last time that this thing had made a high out here was on day number 8 back on September 21st. So I'm going to go with no. I'm not saying if you were in it to get out, but I'm saying that if you're in it, pay attention over the course of the next couple of days, because this thing could make a short-term top and price could easily pull back and test Stevie's red line at 1085. And I would say if in the next couple of days this does not close over 1175, the top of that weekly profile, that may more likely be the scenario. And there, what you might want to do, Bob, is take a look at buying in if price is pulling back on a with lighter volume, and that's at about the 1084 level. So again, if you're trading FCX, you are a currency trader as much as a miner out there. Those two are attached at the hip, so make sure you get the currency right. Steve Rhodes with TFNN. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's take a look. We got a question here from James JJ, as I like to call him, and he's asking a question about the SPYs and ABCD patterns, and he's confused because he's saying that I see an A to B equals CD up, others see an A to B equals CD to the downside, and I just want you to know both can be correct out here. So here's what I want you to take a look at, James. Let's do this. Let me go ahead and add volume. And his question is, how do I know which one to believe, or where do I start the swing points, and so on and so forth. So here's what we can do. We can start with, let's take a look at the A to B equals CD to the upside pattern that we looked at earlier when we looked at the spinning only. Let's use the SPY for it. And here's what we can see. We can see that December 26th is the actual low out there. So no matter what, whether you buy into an A to B equals CD pattern, the upside or not, if you're going to draw one to the upside, you've got to start with that lowest low out here. That's December 26th. Then we take a look at where was the high that was formed before you saw some type of pullback out here. And the high on the trading day of December 28th is 251.40. And then on this January 2nd, 251.21. So we already know where the B point is, December 28th. What we also know about December 28th is it did 153 million shares. Now, on the trading day when price passed through that level was January 4th. That was 142 million shares that took out 153 million shares. Well, okay, it didn't do it with volume. Does that matter? No, not necessarily. If it did it with volume, you'd have conviction to then say, okay, it's kind of, we use the language around here, a confirmed A to B equals CD to the upside. Does that mean a not confirmed is not going to make it? No. What it does is Tom had named this the so-called Tiger Gartley out there because price had passed a B point and did it with light volume. So if you were reading his book, The Art of Time in the Trade 2, no, it's Art of Time in the Trade 1, and you would be drawing in a Tiger Gartley pattern that takes us up to 261.31. That's your one-to-one. Price can go beyond that. So JJ can go to the 1-to-1.272 as an example. Now, what would be set up there on your A to B equals CD is what could be the Tiger Gartley sell. Now, typically what you like to see is some type of retracement level come in right around where the D point of that A to B equals CD is. But it doesn't always happen like that. And for the retracement level that we'd be looking at and where the 1-to-1 or 1-to-1.27 would complete, what we do is we look at the trading day of December 3rd. I'm going to use that as the high, come all the way down to the trading day of December 26th. And what you will see is at the 0.618 retracement level, 262.58, not that much further away from 261.31, that is where the so-called Tiger-Gartley pattern could form. Now, I don't know if price is going to get up there or not. What we do know when we took a look at the equity futures contracts half an hour ago is price had pulled back to a level of support. Tested it, rejected it. We took a look at the Tom DeMark power of 9. We know that today is likely to be day 7, unless the markets just fall apart between now and then. They could, but if they don't, then today is going to be day number 7. We know on day number 8, 9, or 10 is when the typical high would come in of that pattern. So this is still out here. That is what could set up the A to B equals CD to the downside. That is your Gartley pattern out there. I can't really draw, well, I can draw on what would that look like. Your A point on the downside out here, what I would do is I would use the same level that we began those retracements at. I would be using the high of December 3rd. So as an example, JJ, if we went ahead, we use that as your A point. Your B point is December 26th. Your C point, let's just assume that I'm wrong. It's not going to complete. And the actual high out here is one that already came in at $259.16. That was on January 10th. Then you would have your A to B equals CD to the downside, potentially. That would take you to 212.52 on the one-to-one scheme. So you can have both. You can absolutely have both. See, if we take a look at the DIA, the diamonds out here, here's what you're going to see, JJ. If you take a look at the diamonds, same pattern out here. Its high was January 2nd, and that was 5 million shares, and it was passed with 7.3 million shares on January the 4th. So this has a confirmed A to B equals CD to the upside, I say. I dare say. Now, does that mean that it's going to complete out there? No, it just has a higher probability when you pass through a level of resistance that it is likely to unfold. But the reality is, when you trade currencies out here, you're looking for these same patterns. And when you trade currencies, you don't have volume. You've got nothing that you can rely upon. And the reality is, with regard to the diamonds, the SPYs, the Qs, the IWM, the volume is basically meaningless. What? What did you just say, Steve-O? Realize how many instruments it is that you can trade out there that replicate the SPYs, the diamonds, the IWM, not until you can find some way to go ahead and put all of that volume together, all of it together, are you really going to be able to rely completely upon the volume that just simply shows up in this ETF? At this stage of the game, for each of these, we know a couple of different things. That's why we go take a look at the equity futures contracts out here. This is how I put it together in my mind. If you can understand my logic, well, then at least you can understand my logic, and you can say, you know, Steve-O, that's pretty illogical out there. That you wouldn't be the first. Here's what you and I know. The equity futures contract, the Russell 2000 is above resistance. The top of the daily and weekly. The Dow, the same thing. The ES Mini, the same thing. The NQ, not so much. So you've got 3 out of 4 saying the same thing. They actually want to move to higher price. And JJ, that is Stevie San's take on what's going on inside the SPY and or anything else out there. Hector writes in, Hector C, he writes in, can you give us your take on NBEV? So let's go do that. We absolutely can. And NBEV is Bud? No, that's not Bud. It's New Age Beverages. So New Age Beverages, that must be something where it's laced with, you know, something. But let's take a look at New Age Beverages. Here's what we know. It's passing the B point right now. Right this very second. The B point would be the high of December 18th. That's the swing point. That did volume of 18 million shares. You're at 18,697 as you speak right now. Here's a B point being passed with volume. So what we can do is we can go ahead, and it's almost as if Hector C was reading the mind of JJ out here. I don't know how that works. Coincidence? I don't think so. But if we do take a look at the A to B equals CD pattern here inside of NBEV, you start with the low on November 14th. That's your A point. Your B point, December 18th. A retracement down for a few days, 3 or 4 days, December 24th. And voila, it looks like NBEV, Hector, is headed up to $8.58 here at 707. What else happened today? Price is over the top of its daily profile. That is 647. Assuming it closes over 690 and certainly 647, this says it wants higher price. Does it have to stop there? No. The 1.272, 963 could be the test. This high volume high that hasn't been tested from the trading day of 921. So Hector C, I say that NBEV is headed higher. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So right now, I'm actually trying to multitask here. You got the Dow down 67. The S&P is off about 9 points. The transports are the only indices that are to the upside. If we take a look at the trannies out here as well, with the transports, so basically the majority, if not all of the indices, are in day number 7 of that Tom DeMark setup, potential Tom DeMark setup 9 count. What it would eliminate, what would negate that would be any closing today or tomorrow or the following day on Wednesday, it closed below the bar 4 bars earlier out here. Well, we don't have that today, and so it looks to me like there's an A to B equals CD pattern here inside of the transports as an example. Now, its low was on December 24th out here, and we're going to see that this has already completed a 1 to 1.272 A to B equals CD. That says that price may want to go up to its next level. The next level here is going to be 98.35. Does it have to get up there? No, it does not. If there is, and this is the so-called meaning of a Gartley sell pattern, or could be a Gartley sell pattern. Now, markets, when they're making these A to B equals CD patterns, whether to the upside or to the downside, you don't just sell the D point, meaning the 1-to-1 level, or buy the D point. I mean, do whatever you want. Stevie's going to say, don't. And the reason I'm going to say don't is you can go back and take a look at charts out here, and what you will see is that the buyers or the sellers are going to signal when it's ready to make that next turn, whether to the upside or the downside. How do they do that? They do that because they do not hide. They don't create smoke signals. They create Japanese candlestick signals. And that's really the key out here. You've got to, or you should put your patterns together with the Japanese candlesticks out there. That's the game today. So, folks, thanks so much for staying with us here at TFNN, listening to the show. Stay tuned, because my favorite polar bear, David White's up next. After that, Tom O'Brien, 3 to 5. And I'll be back with you tomorrow morning, 8 to 9 a.m. Listening live. Send me an email. Give me a call. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.